Taking a look at the interest rate markets today, I want to focus on the 10-year note. 10-year note continued its rally today. Really all week we have seen a bounce back. Nothing to the magnitude of what it gave up last week, but still we're seeing a trend now develop to the upside after the big selling pressure last Thursday and Friday. So we're seeing the 10-year note right now right around the 129.29 level, and that's up even in the after hours market. So at the high end of the range for the week. And with that, we're seeing yields being pushed lower. And right now that 10-year yield coming in right around the 1.715 level. So again, kind of in the middle of this range. It started the week at around 1.901. So we are seeing, 19 basis points coming off that yield here this week. So that's quite significant. Looking at the 2-10 spread, something that market participants certainly like to pay attention to. We're seeing that hold right around the 3 basis point level. It's hovering right around 3 to 4 basis points. So we're still seeing, again, a positive yield curve there when you look at the 210, holding out of that inversion and again maintaining this 3 to 4 basis point trajectory right now through this week. Also, I want to point out the Fed I think is very key. Not only was it this week, but moving forward. Certainly we had the announcement on Wednesday and the markets reacted accordingly, but now the Fed speak begins again and we're already seeing it stream out. We're getting a lot of Fed officials talking the last couple of days and it's going to continue into next week. And I think certainly when you see how that does have a significant impact on the expectations moving forward, and I would suspect that that's going to continue to maintain the volatility that we continue to see in the bond space. Now that the Fed is free, these officials are free to talk about what they thought. The dissension was highlighted in the minutes and the meeting coming out of in the press conference when we saw a 7-3 vote where we had one person opting for a 50 basis point cut and a couple others opting for nothing. So that disparity continues, and I think that's why we're going to continue to see volatility in this space now that the Fed officials are able to speak.